Luciano Siracusano. A lot of people have different definitions for smart beta ETFs. It's currently the hottest trend in the ETF industry. How does WisdomTree define smart beta?
Well, it's a broad phrase. Somewhere between beta and alpha lies smart beta. But I think the way to think about it is it's another kind of indexing that gives you broad representative exposure to equity markets. But what makes a difference is that the exposure is not market cap weighted. You're weighting equity markets by something else than the market capitalization of the companies in those markets.
And does it actually beat the indexes?
Well, it depends on what strategy over what time period, and so I can't comment broadly, but let's just say there's a lot of data building up in real time that would lead you to conclude that cap weighted is not optimal.
Well, WisdomTree has always been in the so-called smart beta space, haven't they? I mean, is this how you guys started with overweighting dividends, overweighting earnings, that kind of stuff?
Well, when I invented dividend weighting a decade ago, they weren't calling it smart beta. What we were saying is let's take an equity market and let's weight by income. Now, over time, people needed a catch-all phrase, and they're calling equal weighted smart beta, they're calling fundamentally weighted smart beta, low volatility weighted smart beta. But what they all have in common is that they're not weighting the market by market cap. And you got to ask the question, why? Why are all these index providers changing what they had been doing for 50 years? And the reason is there's an overwhelming interest in owning equity markets in a way that can either get you higher returns or lower volatility. And the key to it is that you delink the stock price from the weight in the index. That's what they have in common. And that was the key insight that launched WisdomTree.
So how do you feel now that a lot of other companies are getting into this so-called smart beta space? Are you feeling like, hey, we were here first, get out of our sandbox?
Well, it's a validation, and we always invite the competition, but when you lead, people will follow. And I would say that last year you saw about $65 billion come into the ETF industry into so-called alternative weighted ETFs. It was about a third of all the flows came in. And what that's telling us, there's a great demand for innovation and for hopefully something that's better. And we think this is indexing 2.0.
So what happens next? Where is indexing 3.0? Where do you go from here?
Well, where you go from here is to get people to really understand and focus on what's out there. Some of the best performing indexes over the last 5 years, most people don't know about yet. So the first part of it is to show them what's actually happened in real time, then explain to them why, and then why we think it could continue in the future.
All right, we're going to watch it. Thanks, Luciano.
Okay, thank you.
Thank you for watching The Street.